Yo, what is up, guys? It's Justin with Tactical Traders here, and I'm here to go over our daily recap for Wednesday, the 18th. I hope as everybody has had a great day today here at Tactical Traders. We took around 2 trades, and both of them were winners. Overall, it was a great day for us here, and let's go over the charts and look at what we traded today. So, starting off on the daily time frame and the weekly time frame, basically, we've been having a really big downtrend that's been going on for the last 2 years. I'm sure you all know about it. And today was going to be a really interesting sign to see if we were going to continue to the upside and potentially break this downtrend, or if we were going to reject and head back lower. So we ended up rejecting this. We had a really nice sell-off to the downside. I'm a scalper, so when I see these types of moves, I don't care for these big moves. Again, we're not going to catch those big moves. We like to take advantage of short-term moves because that's what we're comfortable with here. And let's jump into our first trade and what the reasoning behind it. So on our 30-minute chart, looking at ES here, when I open the chart, I can see that we're sort of chopping up and down in this range, right? This 4028 level to 4035 level, we come down, we come back up, we come down, we come back up, chop, 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 and we're kind of sitting in this range, right? But it looks weak to the upside a little bit. So I'm starting to think I'm a little bit long biased at the start of the day because I want to catch a move to the upside. I think short term wise in the first 30 minutes to an hour, I think that we have potential longs that we could catch. So let's go down to our 5-minute chart and I'll show you guys our first trade that we ended up taking. So when the market first opened up, we actually ended up sitting on hands for at least 20 to 30 minutes at the start of the open because it was very choppy. It was all around. There was no real sign of direction. And so we wanted to really let the market sort of present itself to us. We wanted the market to set up and we wanted to be patient, let the market come to us, let our setup start to appear. And that's exactly what we did. So at around 30 minutes after the market open, I noticed this 1-minute fair value gap that I noticed once we pushed up, and I started to become a little bit more long biased. And the reason that is because, as you can see on our 1-minute chart, we are here forming lower highs, and on the top as well, we are forming higher highs. So I'm starting to feel a little bit more long biased to the upside. Again, this is a really big support point at this 4,028 level that I thought that we could potentially break to the upside. So I wanted to see if we could potentially get into a long play to catch the break of this move. So once I saw that we were creating lower highs and this 1-minute fair value gap was forming, I waited for us to come back down and I waited for us to give us some kind of confirmation for a bounce. So as you can see right here, wick came down, rejected. Another candle came down that we closed above, and right when this third candle closed above this gap, I ended up taking my long entry of 3 contracts right here without hesitation, and I set my stop loss right here at the bottom of this wick. Super tight stop loss. Again, at Tactical Traders, we are here to practice risk management and good habits. If this trade goes against us, we take a small loss on it, but if it goes in our favor, we take a big win on it. And that's how we stay consistent here. We entered in 3 contracts. I ended up scaling out my first contract right here. Once we get that first push up, I always like to take at least one off to secure some profits, right? Especially when it's a lot of volume coming in. I ended up taking my second contract off right here on this second push. And the reason I did is because going into a high confluence area like this big resistance level at 4,028, I don't know if we're going to reject this. I don't know if we're going to break through it. So I want to take off my contract to try to get the best fill as possible. And then I ended up taking my last contract off around here once we broke above this level. So this was overall a great trade to start the morning. I'm super happy with how we traded. We were super patient. In the live, I kept talking about being able to sit on your hands and not have the need or itch to take a trade. You want to let the market come to you and let the market set up in your favor. If you let the market boss you around and make you want to get into a trade and itch to take a trade, you're going to end up taking a trade that's going to go against you because it's, number one, it's not going to be an A+ setup. It's not going to be it's not even going to be necessarily your edge, and you're going to be rushing to take a trade that's going to end up failing on you, and you're going to end up getting mentally distraught from it because your first trade of the day is going to end up red, and you're going to end up falling down a hole that you don't want to fall into. So I'm super happy with how we traded this today. We were very patient, waited for that setup to come, and we ended up getting a nice trade with literally zero drawdown. We had zero drawdown and got a perfect entry all the way to the upside. Caught this breakout here, and our traders banked today. This was an amazing first trade. Maybe it lasted around 5 to 6 minutes, but that's how we like to do it here. So let's go over, look at NQ, which was our second trade of the day. And since we ended up making money on this trade, but our last runner ended up getting stopped out at break even. And I want to show you guys the reasoning behind this trade and what I could have done differently looking back at it. I did make money on this trade, but we could have made a lot more money if we just were a little bit more patient and I flipped my thinking a little bit differently. So I'm going to show you exactly what I'm thinking, or exactly what I'm talking about here. I'm going to clear this chart here, and I'm going to add what I was watching at the time. So what I was watching at the time is I saw a strong push to the downside, right? We came up and failed to hold above this 11,720 level, which was a very key level. We came into this 4 hour. This is a 4 hour fair value gap that I had. As you can see, we have a fair value gap. We go wick to wick. And as you can see, right when we came into this on our 4 hour chart, we flushed hard, which is, guys, once again, fair value gaps are showing how strong they are. So on our 5-minute chart, this is an amazing structure of a smart money ICT concept. We see this strong push to the upside, strong push. We ended up taking out this buy side liquidity, and we end up coming back inside of this range. So on our 1-minute chart, what I'm watching for is I'm watching for a retracement back into these fair value gaps on the 1 minute to potentially take a short entry. So I had a 1-minute fair value gap right here, and I had another 1-minute fair value gap right here. And as we always like to teach, past fair value gaps are going to act as points of confluence for the future. Many of our trades that we've taken have been from past fair value gaps or new fair value gaps, but they're going to act as resistance or support depending on how you're trading them. So my initial entry, or my initial thesis of this trade, was to enter short once we got to this first fair value gap, which we ended up doing. I ended up taking my first trade right here. I entered in 3 contracts, and I ended up scaling out 2 of my contracts on this first candle to the downside. Once I saw a lot of sellers coming in, I liked this candle, and I was already up on the day, so I want to minimize my risk, right? I don't want to put an extra money on the table when I don't need to. We're all about risk management. If I'm up on the day personally, I'm going to lower my size when I have to and when I need to. So this first candle, I ended up taking 2 of my contracts off for profit, leaving my 1 contract left with a stop above this wick currently right here. So I set my stop at the top of this wick, hoping for a move to the downside when we ended up bouncing, and my last contract that was left ended up getting stopped out for around $100 loss. So I made a little bit of money on this trade since I took profit on those 2 contracts. But looking back at this trade, I realized something, and I realized that the setup I took was actually wrong. This was not a good setup to trade. And the setup I should have taken is this 1-minute fair value gap. And I'll tell you the exact reason why. The reason is because when looking at this structure, when playing fair value gaps and retracement bounces, you want to have a retracement of at least 50 to 61%. That is what a proper retracement is, right? We come down, break below this 11,720 level, and it is acting as a key resistance point. I want to wait for us to come up to this. Number 1, we have a 1-minute fair value gap. Number 2, we have 1121 acting as resistance, which is a very key level that is a potential short opportunity. And number 3, something I didn't notice and I forgot to mark in at the time, is we have our 51 to 61% retracement level that fits inside of this category. When we traded this 1-minute fair value gap, this was way too early. As you can see, we didn't meet that requirement to take that trade. Since we did make money on it, though, I like to think of this as just luck. Even though we took a winning trade, it was a winning trade, I like to think of it as a failed trade because this wasn't a proper setup that we should have been trading. It did work out for us, thankfully, because we had good risk management. But we ended up missing one of the best plays in the entire day because we entered a little bit too early and we're a little bit impatient. So this would have been our amazing entry to enter short once coming into this fair value gap on the 1 minute a 50 to 61% retracement, and an amazing ICT smart money concept model. As you can see, right after this, we ended up flushing, absolute beautiful flush to the downside, and we ended up missing out on this big move here, but we did make a little bit of money on the second trade here. So overall, I think it was a pretty good day. We did make money. We did miss out on this trade, though. We got stopped. We did make money on the first trade that we took right here, but we did miss out. We're a little bit impatient, and I failed to recognize this prime setup right here. Looking back, I love learning from these. Right, this is an amazing concept to learn. The past fair value gap mixed in with the 50 to 61% retracement is an amazing tool to use for bounces and entries. And I'm glad that I was able to witness this live and talk with it with my group and explain the reasoning behind the failed trade and what we could have done differently. So I'm super happy with how we traded today. We followed our plan, we followed our risk management, and I think it was overall a great day. So I'm excited to see how the market comes in tomorrow. Again, we do have a lot of news that is going to be coming out all day tomorrow. So if we're going to end up trading tomorrow, make sure that number one, we're trading small size, guys, super small size. I'm talking about maybe 1/10, 1/5 of your normal position size. We do not want to get chopped up in this news. Last time we traded FOMC in the Discord, it was a red day because of the news. It was very volatile, very choppy. So we want to be careful about that. Overall, though, I think it was a great day. Super excited for the future here at Tactical Traders. Hope you guys learned something from this review, and I'll see you guys tomorrow. Stay great, everybody.